All right, I'm going to do some homework for you guys in chapter 9. And I'm, again, like usual, only going to do a few just to help you get started. Dextra Computing sells merchandise for 18,000 cash on September 30th, and it costs 10,800. And in addition, we're going to collect 2% sales tax, record the entry for the 18,000 sale. All right. So the sale, right? We can do the 18,000 plus the 2% sales tax. So I'm going to debit cash. I want to say that's 18,360. And then the two credits are going to be the first one's going to be sales revenue, and that would be 18,000. And then the second one is going to be sales taxes payable. Right? We're going to collect the sales tax and we're not going to keep it. We have to forward that off to the taxing authority. And we can check our work. What? Oh, man. Sorry. It would be sales taxes payable. I think I just clicked the wrong one. Sales taxes payable. Sorry about that. Okay, then we can move on to the next part of this question. Yeah, it's kind of weird. Like, why is it not allowing me to do part two of this question? Return to the question. Let's see if we can figure that out. Uh, how would I move to the second? Hmm. Okay, well, maybe we won't. Um, because I want to say that question two is a totally different question. So going back to question one, um, unfortunately, I am not seeing how we can move on, at least from um, my view. I can do it. We can just talk about it. The second part of the journal entry is going to be cost of goods sold, right? We have to do 10,800 cost of goods sold, and so I would debit cost of goods sold for 10,800, and I would credit inventory, merchandise inventory. That would be the second journal entry. And then on October 15th, I am going to debit my sales tax payable because, again, that's a liability that I'm lowering. And then I would credit cash and we would send that cash to the taxing authority. And so I'm going to move on to question two. Question two is Ticket Sales Incorporated receives 4,600,000 cash in advance ticket sales for a 4-date tour of Bon Jovi. I would definitely not be going to this show. Anyway, record the advance ticket sales on October 31st. Record the revenue earned for the first concert date on November 5th, assuming it represents 1/4 of the advance ticket sales. Okay, so I could uh, collect cash for 4,600,000. And then I would credit sales for the. Now I need another zero. I could credit sales for the same amount. Man, I'm killing myself. It is not sales. It is unearned revenue, unearned ticket revenue. And it is not sales because Bon Jovi has not performed his show. And since he hasn't performed his show, he hasn't earned any revenue, right? Ah, so 4,600,000. 1, 2, 3. There we go. That is the journal entry on October 31st. Then, once he performs at least one of the shows and earns 1/4 of the revenue, then we can recognize revenue. So I would debit unearned revenue of what is 4,600,000 divided by 4. It's going to be 1,150,000. And I would debit. Now I can nail sales for the same amount. 1,152,300. Not bad. Moving on. Question 3. Interest-bearing note transaction. Okay. On November 3rd, Mira Company borrows 250,000 cash by signing a 90-day, 8%, $250,000 note. Remember, every time we see an interest rate, it's always an annual rate. Okay. So compute the accrued interest payable on December 31st. All right. I think I can do that. And then 2 and 3, prepare the journal entries to record the accrued interest expense at December 31st and the payment on the note at maturity on February 5th. Okay, so we're going to borrow. How much are we borrowing again? We're borrowing 250,000. And the rate, the annual rate is 8%. So I think all of these are still going to be 250,000. 8%. Oh my God, I'm so hungry right now. Okay, then the time period, right, through maturity, that's going to be 90 divided by 360, right? So the entire amount is 90 days, and we're always going to divide by that 360. So 90 divided by 360. And then I'm going to do the year-end interest accrual. Okay. So again, if I borrow on November 7th and it's through the end of December, then I have 31 days in December. And then I think I have 23 days in November. So 23 plus 31 is 23, and 31 is 54. And then through interest recognized February 5th. What is that? Man, I think maybe it is going to be January 1st through February 5th, right? Because we're going to incur some portion of the interest in this year and then the rest of the interest in the second year. So the time period January 1st through February 5th is going to be 36 days. 31 days in January and 5 days in February. Then you could do the math, right? And I don't know that I'm going to do that, but I will let you do it. Then we can do the journal entries. So the journal entry on December 31st, it's going to be interest expense is my debit. Interest expense, and then interest payable will be the credit. Again, we're not making the payment on December 31st. All we're really doing is recognizing the expense that we incurred in in this first year, right? And the expense that we incurred in this first year is going to be the 250,000 times 8% times the number of days that were in the first period, which was 54 divided by 36. Then the second journal entry is going to be, and I probably have to check this one first, but then the second journal entry on February 5th is going to be, again, interest expense and interest payable. Actually, maybe it will be cash. Actually, you know what? Let's do this whole thing. Let's go back. Let's calculate these. Okay? I'm going to calculate these offline and I'll be back in a second. Okay, I did the calculations. I promise I did them right, but I checked them before I came back. So the total interest that we pay through maturity is going to be the 250 times 8% times the entire period, 90 divided by 360. So we're paying a total of 5,000 in interest from November 7th through February 5th. Okay. The portion of interest expense that we're going to recognize in the first period, November through December 31st, is 3,000. And again, that is 250 times 8%. And then the number of days in the first period are 54. Okay. So 54 divided by 360 times 8% times 250, we get 3,000. Then the remainder, right? The portion that we recognize the interest expense in the second period, January 1st through February 5th, is going to be 250,000 again, the principal amount, times the annual rate of 8%, adjusted for the time period in the second period, which is 36 days, divided by 360 days, for a total of 2,000. Okay? Then we said we would do the interest expense going through December, and we said that was 3,000. Sorry. We said interest expense was 3,000 and interest payable 3,000. Okay? Now, this is what I wanted to go over on February 5th, okay? February 5th is a complicated journal entry, and so I wanted to go through it. So we're going to record the payment of the note at maturity, okay? So the first thing I'm going to do is I'm going to debit notes payable. If I can find it, there we go. I'm going to debit notes payable by 250,000. All right. Second thing I'm going to do, I'm going to recognize the interest expense. Actually, maybe that's not what I will do. I'll do that third. The second thing I will do is I will let go or satisfy. Man, I need more room. I need to get rid of the interest payable that we created in the first journal entry, right? And the interest payable, we said we recorded interest expense as of December 31st. We said it was 3,000. So I am going to get rid of that as well from the previous journal entry, right? This journal entry right here. And then I'm going to recognize my interest expense in the second period. And the interest expense in the second period was 2,000. And then finally, I'm going to do cash, credit to cash for the entire amount, which is 2,555. And I'm going to check it. And if it's wrong, I'm going to start crying in front of you guys. Oh, nice. All right. That's a tough question. That is a tough question. But I also do really like the question. So question 4 is another note payable question, and I believe that I'm going to leave this to you guys. And so I'm jumping to question 5. Question 5 is, what is question 5? BMX company has one employee. FICA Social Security taxes are 6.2% of the first 137,700 paid to its employee, and FICA Medicare taxes are 1.45% of gross pay for everything. For BMX, its FUTA taxes are 0.6% and SUTA taxes are 5.4% for the first 7,000 paid to its employees. So this question is employer payroll tax. This isn't a question regarding the employee's pay. It is the second component of payroll, which is the employer's payroll tax. So this question is asking us, hey, if I give you scenarios, scenario A, scenario B, and then scenario C, can you do the four different types of Social Securities? Sorry, the four different types of employer payroll taxes. All right, so scenario one, right? Scenario one, we're looking at gross pay through August 31st. And the reason this is important is because once we hit 137,000, we no longer have to pay Social Security. And in addition, once we hit 7,000, we no longer have to pay the FUTA and SUTA. So this first year, the employee has already earned 5,100, and then this paycheck is 2,200. So we're trying to figure out what portion of the 2,200 is subject to Social Security and what portion is subject to FUTA and SUTA. So since the employee has only made 5,100, the entire amount is subject to Medicare and Social Security. Right? The FUTA, on the other hand, again, we only have to pay taxes up to 7,000. And if I've already earned 5,100 and then I'm going to earn another 2,200, I'm thinking only 1,900 of this is actually subject to FUTA and SUTA. Because again, we stop paying when we hit 7,000. So I think I'm going to say that this is 1,900 and 1,900. And then the tax rates, this would be 0.062. This would be, well, sorry, we can do this way. 6.2. Man, you're killing me. 0.062. Killing me again. 6.20. How's that? There we go. This one is 1.45. This one is 0.6. Finally, this one is 5.40. Okay. B. The employee has only earned 2,600. Then the employee is getting paid 2,700. So the entire 2,700, that is subject to everything. We're never going to hit the 137 at all. So not going to come anywhere close. And we're also still under 7,000. So I'm not even going to do B. I'm just going to leave B all the way for you guys. But let's talk about C. Okay? C, the employee has already earned 132,000. The current paycheck is 8,600. But remember, we don't have to pay once we hit 137,700. So I think only 5,700 of this is subject to Social Security, because 5,700 plus the 132 would get me to 137,700. So I'm going 5,200. And then the entire amount, the entire 8,600 is going to be subject to Medicare. Because there is no max on Medicare. And then FUTA and SUTA, man, we have blown so far past FUTA and SUTA. Remember, we only have to pay FUTA and SUTA up to 7,000. So neither one of these are going to be subject to those tax rates. Okay, I like question 5 because it was easy for me. Okay, moving on. 6, question 6. 6 is just asking for the Actually, I guess 6 is asking for something different. Assuming situation A, all right, so assuming situation A, prepare the employer's September 30th journal entry to record salary expense and related payroll liabilities. Ooh, okay. Salary expense. So, what is the salary expense? September earnings subject to tax. Oh, the whole entire amount is going to be subject to federal income taxes. So we'll do 2,200 here. Come on now. Man, why? Yeah, we'll return the question. It's glitching on me. That's very weird. Very, very weird. But our portion that is subject to, man, okay. Well, I guess they're already telling us that they are withholding federal income taxes of 80. I was trying to figure that out. But they're telling us, hey, don't worry about it. We're already covering that. Okay. So then, taxes to be withheld from gross pay, the employee paid taxes. So in addition to federal income taxes, we will pay state income taxes, and then the employee will pay Social Security and Medicare. Okay. And the portion of the earnings subject to both. In scenario A, the employee is getting paid 2,200. He or she has already earned 5,100. That's nowhere near the max. So the entire amount of 2,200 is subject to Social Security. And then the entire amount is always going to be subject to Medicare. The Social Security rate is going to be 6.2%. The Medicare 1.45%. So the employee's gross pay is 2,200, and then these are the three deductions. So we're going to deduct $248.30 from this employee's paycheck. And therefore, I'm going to do employee salary expense. And the salary expense is based on the gross amount, and the gross amount under scenario A is 2,200. So I am going to debit salaries expense of 2,200. Then I'm going to do federal income taxes payable. Why can't I find that? Here we go. Finally, geez almighty. And I think we said that was 80. And then we were going to do two decimals, please. Okay. Yeah, I did that. Then I'm going to do Social Security FICA payable and Social Security Medicare payable or FICA payable. But man, FICA Medicare tax payable. And I don't remember the name or the amounts of these, so I'm going to go back. Social Security was 136.40. $136.4. I don't even know what that is. And then let's go back. Our Medicare is 3190. I'm going to check it. I'm going to start crying if it's wrong. Income taxes. Oh, man. Is that going to be income taxes withheld? It still should be payable. Income taxes payable. I'm still thinking that should be income taxes payable. What are my other options? Employee federal income taxes payable. Fair enough. Fair enough. Same concept. Income taxes or employee federal income taxes payable. Either way. That is our journal entries and calculations for Social Security tax. It is the calculations that we do for employee salaries. But this question actually isn't finished, right? Um, return to question. There is still, it's really, really very, very vague. This question sucks. In fact, it's wrong. Um, salary expense is 2,200. Okay. And therefore, what we need to do is we need to have a series of credits that are going to equal this 2,200. So what am I missing? I am missing employee salaries payable, right? I can find it. Here we go. And that's going to be the difference. That is going to be the net pay, right? I can't believe we missed that. What is 2,200 minus 80 minus 136.40 minus 31.90? I'm coming up with net pay of 1951.7. Now I'm going to check it. Now, I don't know why it said it was right the last time. Maybe it didn't. But this looks much more correct. Now my credits equal my total debits. And this is the portion of the payroll expense or salaries expense. So the previous question was the salary or payroll tax expense, the employer side. This is the employee side. It's a good question. And now I think the only thing I want to do is let's move to question 11. If I can, here we go. Question 11. I'm going to skip through a bunch of the other Social Security and payroll, employee benefits, that stuff I think I'm going to leave for you guys. Question 11 is dealing with warranty expenses. So on December 1st, Home Store sells a mower that costs $240 for $540 with a 1-year warranty that covers parts. Warranty expense is estimated to be 6% of sales. On January 24th, of the following year, so next year, the mower is bought back and we need to repair it. And the material expense to repair the mower is 38. Okay, prepare the journal entry on December 1st to record the mower's sale and cost of sale. Do the adjusting entry on December 31st, and then do the warranty paid on the following day, or the following, which was it, January 24th. Okay? So, December 1st, to record the sale, that is just going to be 540 in cash and 540 in sales. All right. And then I'm going to do cost of goods sold and merchandise inventory for 240. I'm going to move fast. I'm not going to do the drop downs. Then I'm going to do the adjusting entry on December 31st. And the adjusting entry is going to be, bear with me while I find here it is. The adjusting entry is 6% of sales. All right, so it is going to be warranty expense and warranties payable.